It's time now for On the Radar, when we ask an investing professional what they are looking at in today's markets. We're back again with Gavin Graham. He's a longtime market professional and currently contributing editor at the Income Investor and Internet Wealth Builder newsletters. And Gavin, you've talked to us about the oil stocks, the bank stocks, and the copper stocks. You also like some Canadian real estate investment trusts.
Yes, and it's, again, remarkable that and I think we'll be discussing this with the unemployment numbers coming through, but one of the aspects of that is the enormous growth in population in the country because of the very large number of immigrants coming in, which is running sort of 450, 500,000 a year. I think, in fact, and maybe you'll be discussing this later, it may even be, growth in the population, along with natural reproduction, is getting up towards 100,000 a month or something fantastic. And where are they all going to live? And the answer is we're not building enough apartments, and the ones that we are building are unaffordable to purchase for many people, especially since interest rates went from 0.25% to 5%. So rental apartment REITs are, in our view, a very attractive area, and yet the prices haven't done anything. You're actually down about 10% over the last year for the iShares REIT index, which does include some areas which have weakness, like, for example, office properties and conventional retail. But apartment REITs are also generally down as well. The biggest Canadian apartment REIT is, I think, off about 10%. There are a couple that are doing well. Boardwalk, which of course has a concentration in the prairies, Alberta, the economy is going great guns. Saskatchewan as well is up something like 20-odd%. And then Minto, which specializes in city centre apartments, is also up about 10%. Both of those are recommendations in the Income Investor. But then so is Capreit, so is Interrent, which is the 905 belt around Toronto. So you're looking at companies which have a very strong tailwind in terms of growth in population, shortage of supply. I know that certain people, like I think BMO's senior economist has said, well, maybe actually with the government clamping down on non-permanent residents, that will actually reduce the demand by cutting back on immigration, and that there's a record number of new apartments coming on stream, all of which is good news, but there's still a very, very big gap. And yet these stocks are generally down over the last year because they have a lot of debt, and therefore with interest rates having gone up a lot, people have sold them like they've sold the other financials. You get a reasonable yield. It's not as high as other REITs, but it's still fairly attractive, and it's growing. And the one thing I think it's important to state about rental apartments is that, and I think Minto has a great chart here, that the average wages have kept pace with average rents, whereas the actual cost of buying somewhere has shot way up. So while rents, we look at it and go, oh my gosh, look at it's $1,500 a month or whatever, that's pretty high. But nonetheless, it actually has not outpaced growth in real wages. So we think these apartment REITs selling at discounts to their NAVs with a reasonable yield, and most of them flat to down over the last year, are pretty attractive.
What about the expectation that interest rates will come down in Canada? Is that a potential tailwind as well for real estate investment trusts?
Absolutely. And in fact, it should help all of them because it's a very mechanical process where you go, your cost of capital has gone up, therefore the valuations of your assets have gone down, regardless of the fact the income being produced from those assets. In the case of rental REITs, apartment rental REITs has actually gone up and is continuing to go up ahead of inflation. And so that should also be a help, but it's not the principal reason why you'd like this. It's that the demographics, the supply-demand balance is really, really attractive.
What kind of dividend, what kind of distribution increases should investors expect from these type of REITs?
Well, it's not going to set the world on fire, but you're looking at 3 to 5%, which, with inflation back down, in the 3%, 4% range, you're at least keeping pace with inflation, which of course is not the case with fixed income.